Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 13th, CPI day, the 13th of October, 2022. Thanks for joining me on episode number 2335. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at what we've done so far, really strong risk off so far. The indices just got pummeled on this CPI release. In case you are still sleeping, CPI came in at 8.2% versus 8.1. The key thing here is that the CPI is expected to decelerate given the action by the Fed, and clearly they're not. Not only are they positive month on month, came in at 0.4 versus 0.2 expected, so a blowout number over there. Blowout number over there, but the CPI should be going negative, right? The market didn't expect it to be, but it certainly didn't expect it to be increasing more than what's expected. So this is where we stand. CPI comes in hotter than expectations, and recession probabilities are rising. And it's very clear that the Fed is going to come in and try to quash this thing even more by increasing rates. So that's basically the bottom line, and that's what you're seeing the market responding to. The overall picture for today is we've got massive ranges, and as a result, we're looking for a pretty active session. We'll look in a second at how this CPI traded. I mean, volatility curbs kicked in for the CME. In case you're wondering why your platform acted like it did, in general, when you have a certain amount of volatility, there are curbs that kick in to make sure the market remains orderly. One thing you should be aware of is this. Let's switch. Is this FedWatch tool? So for November 2nd's Fed meeting, now there's a 97.8% probability of the markets going to 375, 3.75 to 4%. Currently at 3 to 3.25, so 75 basis points, almost certain now, according to the FedWatch tool, based on the Fed Fund futures. I'm dealing with some issues right now. I'm not feeling very well. I tested for COVID last night, but I had the chills and slept very, very poorly. So my focus is not all here today. So back to our sheet. What are we looking for next on the calendar? We did get some inflation numbers out of Germany. The inflation rate out of Germany came in at 10%. In line, we got, again, the core inflation numbers and the CPI number out of the U.S. The initial claims came in at 228,000 versus 215, so a little bit higher, which is Fed-friendly. And then we are getting crude oil. The crude oil numbers today at 11 instead of 10:30. Not sure why. And then this evening, we're looking for the inflation rate out of China. This is going to be very important. The expectation is 2.7%. Month-on-month increase at 0.2%. We also get PPI year-on-year out of China, looking for 1.5%, and then balance of trade out of China, which is a key figure of plus $80 billion surplus. So that's what's on deck. For now, the S&P has traded 533,000 contracts, very heavy, on 138 points of range. You can see it in the chart in front of you right here, 138 points of range. Very, very wide. Point of control at 35.15, and we're accepting prices lower. So That's what's on deck. I'm going to just push right through on what we're seeing. So yesterday, we migrated. Just a little recap. We had this impulse down. We pushed up, consolidated for 3 days, gapped. We closed weak on this gap day last week, and then what we've done is basically balanced over the last couple of days. Yesterday, complete balance inside day. Pretty decent volume yesterday for what we had. I think the volume was yesterday's volume. Come on, baby. 1.43 million versus 1.1 million expected in the RTH. So pretty decent volume. And then we have this balance, and this balance is anticipating today's number, and the market kind of pushed through like I talked about. Well, I didn't talk to you about it. I put up a late trader bite yesterday for Convergent members, but the expectation is we would continue lower and to the 3,500 area. This morning we got the 3,506. So what this did yesterday was completely balanced. Yesterday was very unique in that we did not take out the initial balance statistic, which is rare, which tells us a lot. If we don't take out the initial balance statistic, essentially what it's saying is that whatever business was done on the open, on the cash open in the first hour, the market was not able to move beyond that. So yesterday was a very difficult trade, in my opinion, very choppy trade. And we ultimately, I did try to gun for that IB stat. For those of you who don't know, the IB stat states that there's a historical, and I emphasize historical, probability over 2,500 days that the initial bounce high or low is breached. So the first hour's high or low is likely to be breached at some point in the RTH session. That probability is around 96%. A reminder that past performance is not indicative. So, when we see that the market's approaching the IB high and it's pulling back to short-term support, that's a long for me for sure. And I tried that yesterday. It didn't quite work out. Yesterday was trading from the outside in and was very choppy, and we know why we're coming into today. So here's yesterday. This is yesterday. Just a mess of stuff here, back and forth, back and forth, back and forth. It didn't really accomplish much. We opened right here. The cash opens right here, and we just bounce back and forth, back and forth. We have almost a double IB high, which is historically speaking an 82% probability, historical probability of that breaking. That didn't break either, and we ended up kind of slumping into the close. But the IB high and the IB low, the first hour's high and low, are unbreached, which is very rare. So yesterday I found to be very choppy. We opened up, we did break down, break lower into the overnight low, but overall we've had good separation until the number came out, which was early. The movement was early at 7:28:54 Chicago time. We got this move right here. From 2750. So I'm using that as the SOC, or the scene of the crime. That's more than a minute off. So these guys, there was a lot of volume covering and sweeping up. And then when the number came out, we had this big print down, just a massive print down on a very thin market. And then volatility curbs kicked in, and it was just a bunch of crap in the screen on the screen, and then it started to skew down, and it's continuing to skew down here. So you can see after that it just basically pushed through. So overall, it's just to me, this looks like it's likely to be a very busy day this morning. You got to keep an eye on the treasuries. I think that's what's going to where the big moves are going to happen. The UK issues, treasury issues are going on. There's the SMB also. There's some stuff on the Swiss National Bank this morning and how these Swiss banks are using swaps to make profits or to fund dollar shortages and things like that. There's like a fundamental problem with the economy. What does that mean for us while we trade? Not very much. Here's what the flow looked like on the ES on that number. It was absolutely dramatic. We had a huge gap zone. Oop, man, here we go. So these are 1 by 8 tick bars, and look at how crazy that is. Look at those prints, 1 lots and 2 lots all over the place. See those? Very, very, very unusual trade, like a suicidal trade to try to get in there and get filled. The sellers really did a number on the buyers here, and we've filled in a gap that's below. But look at this print. There's the print, right? So here we see this strange move right there and right there, and then we recover from it, and then in one print, look at you have some volume going off at the top end, but this entire range from 36.15 or so all the way down to 35.73, approximately 50 points, there wasn't a single print. And this is on an MBO feed. So it looked very bizarre, and then from there it just was very, very erratic. And again, you just saw what that's like. And now we're holding steady near lows. To me, I'm a seller today. I'm going to be patient today. I'm going to look for really clear price action structures, because right now the auction is such that it is going to be disorderly, in my opinion. It's not going to be just a run-of-the-mill kind of trade today. It's likely to be quite disorderly, and it's going to be driven by the much, much higher time frame. It's likely to be driven by currency trades, by treasury trades, and so on. So it is not wise to trade this with a small account, even in the micros. It's a good day to maybe switch to sim and practice your plan or do something else, in my opinion. Multi-distribution profile in the overnight session. We've moved the point of control to the low, and we have a lot of separation. So what's important for today? So I can let you go here. And by the way, today we're supposed to do the polling for charity challenge. But there are way too many things that still need to be worked out. We saw how it was it didn't work out so well on Tuesday, but we'll be back next Tuesday so you can vote, so we can put those positions on. The positions we put on Tuesday, there were 3. We were looking for the S&P to close above 36.25, then NQ above 11,000, and the RTY above 1,700, I think. And those positions were very quickly in the money for most of the session until the news out of the UK in the afternoon took us down, and we ended up missing all 3. So we lost money for the charity here on Tuesday, and we're supposed to vote today, but we're not going to run it because there's just far too much going on. And also selecting these prices this morning, the strike prices that we would trade in the charity account, was very difficult. There was way too much movement for me to sit here and go, oh yeah, will we close above or below 3,500? It was just moving around too much. So in case you're wondering why we're not doing a vote today, that's the reason. So what are we looking at for today? So we are pushing into some really interesting territory below. We have the key figure below is 34.72. It's 34.72. That's the key support that I have right now. It's in your stock zone levels on in Convergent. It's this market is very likely to continue lower. However, it's very important. We're opening in a gap out of balance. So we are out of balance this morning, and we did so in a very aggressive way. So the key element here is whether or not the market will be responsive on the open. So when we open this morning, the very first thing I want to judge based on the action is, does the market become responsive? Do we get a push back, not all the way up, potentially not all the way up to yesterday's balance, but do we get a push back towards VWAP, mid, or whatever? These numbers will come down very quickly. Do we get responsive? If we get responsive early, it makes for a tricky trade. So we're opening in a gap. If we don't get responsive, it's easier. Gap rules apply. It's a gap and go situation. So really looking for the market to rotate up. So we're measuring counter rotations. We're looking for the market to rotate up, and we're looking to get short those rotations all the way down to 34.72. That's the key plan for today. So what we want to see early on, what you have to watch for, you have to watch today's open, what you have to watch for is there buying interest in this market at all, given how deep a gap we have, and is it going to be responsive? Have prices moved down low enough to entice buyers to come in and pick up bargains? So that's what we're looking for. Here's the big picture. Let's clear this out. Here's the big picture. So this is the composite chart. Where are we, right? So let's zoom out to see. Here's where we are. We're trading down here, 3,500. So we're trading in this mess right here. We have a microcomposite level at 34.17, but really we're just looking for the 34.72 area down here. We're looking for the market to very likely continue to go lower. I mean, the Fed's already told us that they're going to keep hammering on this thing until inflation goes down. Inflation goes down when employment goes down and people kind of have less money to spend, and that's what the Fed is intent on doing. And to me, we're 100 points below yesterday's range. So if it's not able to get back into this balance here over the next day or so, we're very much going to see the bottom of the 3,400 handle in the next few days. This is what we're looking at. So what are we expecting for today? Let's go back. Boop. What are we expecting for today? The primary scenarios for today. Very simple stuff. The primary scenarios: open auction out of range, looking for responsive buying. Respond, 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 respond. And then I'm looking for, finally, for it to give in back at the open and to start walking itself down into that 34.70-ish area. Okay, this is with the trend. It's with the multi-day trend. I'm not seeing why anybody would step in front of this thing and buy it up and sustainably buy it up. The second open auction that pushes lower, is unable, puts in a higher low, then gets an impulse back to the open, consolidates, and then just starts to squeeze towards yesterday's range and leaving us with a gap. The gap would be all the way up here to down here, a new gap zone, expecting this area to remain open. There's a historical probability that if a gap is not filled within the first 2 hours, there's a historical probability that it won't fill. It'll likely not fill for the rest of the session historically. So That's scenario 2. So again, sitting on my hands first thing this morning to see if the buyers have prices low enough that they'd be interested to come in and buy it up. If not, then I'm looking for it to pop, and I'm selling counter rotations. I'm selling moves that go higher. I'm looking to sell those, and I'm looking to trade towards that 34.70 area. That's the key plan for today. Okay, I'll leave you with that. Please be sure to hit the like button before you head out. And if you're not a subscriber of the YouTube channel, hit subscribe and notify. That helps the channel get exposure and gets more traders looking at the market in a very holistic and sustainable way versus trading only on order flow or on some indicator. The way to trade, and especially to grow your size, to make this a career, a lucrative career, hopefully, is to understand the auction and to have a plan, and then let the market tell you what it wants to do with your plan. That's the way to trade long term. Good luck.